Alright folks, if you blinked, you might have missed it. Wall Street just threw us another curveball today. Big tech got shaky, financials flexed, and the Fed? Oh, they didn't stay quiet either. Let's break down what just happened in the markets on April 17th, and what I'm watching for tomorrow. Let's get into it. So, let's start with the scoreboard. The S&P 500 slid by 0.56%, closing around 5,045. Not a disaster, but we definitely saw some hesitation from buyers. The Nasdaq took the biggest hit, down 1.12%, finishing just under 15,650, mostly dragged by chipmakers and a sharp pullback in Tesla after disappointing earnings yesterday. On the flip side, the Dow Jones was the only major index that held a green candle today, up 0.23%, buoyed by strong performances in healthcare and energy names. Biggest movers. Let's talk about it. NVIDIA fell over 3.8% today after a surprise note from JP Morgan, cutting their price target citing AI hype fatigue. That ripple took AMD and Broadcom down with it. Tesla, TSLA, got slammed again, down 4.2%, after CEO Elon Musk warned of potential job cuts in an internal email that leaked last night. That's two back-to-back red days post-earnings. On the upside, UnitedHealth, UNH, was a standout in the Dow, jumping 2.5% after reaffirming full-year guidance and reassuring investors post-CMS payment updates. Also worth noting, Bank of America, BAC, spiked 3.1% after a strong earnings beat and upbeat guidance on net interest income. We did get some important economic data this morning, and it definitely set the tone. Weekly jobless claims came in at 234,000, a bit hotter than expected. That's the third straight week of rising claims, which is starting to raise eyebrows. And as for the Fed, we got comments from Cleveland Fed President Loretta Mester, who said she's open to holding rates higher for longer if inflation proves sticky. No hint of a pivot yet, and that's keeping traders nervous. Bond yields responded fast. 10-year Treasury ticked up to 4.35%, which helped financials but hurt tech. Let's zoom out and talk technical levels. Right now, S&P 500 is sitting just above its 50-day moving average. If we break below 5,030, watch for a slide toward the 4,980 support zone. Nasdaq is testing a trend line from the January lows. If it closes below 15,600 tomorrow, we could see a deeper retracement toward 15,300. Dow is showing some resilience here. If it can hold above 38,300, I wouldn't be surprised to see another run at 38,700. Keep an eye on volume. We saw a noticeable uptick today, especially in tech. That kind of volume behind a down day tells me institutions might be trimming exposure ahead of next week's PCE inflation data. Here's where it gets interesting. Energy was the top-performing sector today, up 1.7%, with ExxonMobil, Exxon, and Chevron, CVX, riding higher crude prices after geopolitical tensions rose in the Middle East. Unusual volume hit the utilities sector. Yeah, you heard that right. Duke Energy, DUK, and NextEra, NED, saw double their average daily volume after whispers of federal subsidies tied to green grid expansion plans. Keep that on your radar. Meanwhile, semiconductors and consumer discretionary were the laggards. Retail names like Lululemon, Lulu, and Nike NKE both saw a pullback, possibly from consumers tightening their belts after weaker credit card data. Alright, so here's my read heading into Friday. We've got a market that's jittery, not panicking, but it's on edge. Volatility is creeping in, especially with tech looking heavy and the Fed tone getting more hawkish. My play. I'm watching financials and energy for possible continuation, but I'm not touching tech until we see stabilization, especially in names like NVIDIA and Meta. Friday could be choppy. Volume might dry up ahead of the weekend, but if bond yields keep climbing, expect more pressure on growth stocks. If you found this breakdown useful, smash that like button, hit subscribe, and let me know in the comments, are you buying the dip or sitting tight for now? I'm in the comments every evening, so let's talk shop. I'll catch you in tomorrow's recap. Trade smart, stay sharp, and keep your risk tight. Peace.